Good morning, guys, and a happy Super Bowl Monday to you all. Welcome to my first weekly market update. I'm glad you guys could join me today. Hopefully you had a great weekend and maybe took the game in. I don't know about you guys, but I'm a big Packers fan, so cheering for the 49ers yesterday kind of felt like a little bit of dirt in my mouth, but it was a good game nonetheless, and not sure if the right team won, but that's the way it goes. Anyways, thanks again for joining me, you guys. I hope you guys find some value in this, and if you've gotten to this point in time, you've obviously decided that maybe watching and listening to it is a little easier than reading it, and which works for me because that's the reason I do this. Anyways, just want to get down to business now, and maybe talk about a few things in the market, and then we'll get to a few specifics on mortgage rates and that kind of stuff. But no real big changes over the last week. A couple announcements have been made. Of course, if you're paying attention today, they've gotten rid of the penny, which probably doesn't mean a whole lot to my business, or maybe not to yours either, but just kind of an interesting thing. And I guess we'll have to see what comes of this with regards to retailers. I think it's going to be a little painful for some people, but probably not. It won't be noticed by too many regular Joes like myself. Anyways. Last week, Moody's announced that they downgraded a few of the major Canadian banks with regards to their credit rating, and as a result, I got a lot of questions from some of my clients and people that know what I do for a living, and just wondering if that's going to have a direct effect on mortgage lending rates and what we could see here in the spring. And my answer for most of them is at this point in time, it hasn't made any effect on residential borrowing, and I don't expect that it will. Fixed mortgage rates are based on or dependent on similar term bond yield, which means that if you're going to see an increase in rates, it's probably going to correspond with more positive news in the market. So probably not an announcement that's going to have an effect on too many people as individuals. Might end up having more of a correlation and effect on commercial and institutional borrowers, but for people buying a house, that announcement probably shouldn't mean anything. Let's see, I guess we'll get down to the specifics now. Mortgage rates, pretty flat right now. Not a real big move in any of the key rates over the last few months, and last week it was about the same. Everyone seems to be competing on the 5-year fixed rate, which seems to be the de facto choice for a lot of people when they're buying a house. But let's see, a couple announcements last week on a few of them. Few lenders that kind of lend on some niche products to try to pull attention away from that standard 5-year fixed. There's a great 3-year rate that came on last week at 2.59%, which I don't give to too many or suggest to too many of my clients as a fixed rate strategy, just because I think the rates are so low right now, it probably is in their best interest to lock in for a little bit longer. But for many of my clients that are actually really die-hard variable rate fans, then I will tend to put them in shorter term fixed rates and hope that by the time they come up for renewal, that variable rate discount is returned. The other term length that saw a little bit of a dip last week, actually the 10-year fixed rate has dropped 10 more basis points to 3.79%, which is a fantastic product and a really good option for a lot of people out there that are a little more conservative or that might be borrowing right at the top of their borrowing threshold. To get 10 years of guaranteed payments and to be able to budget off that is very valuable for a lot of people. So I'm actually finding that 3.79% 10-year rate is really popular and something that I suggest for a lot of my clients. So those are the only ones that have really moved. Once again, 5-year just kind of hovering around that 3% mark. There's some specials that come on. For people that close quickly, where you can get below 3% or down, as low as 2.89% right now. But anywhere in around that 3% is kind of where everyone's looking, and it's great. We're still at emergency levels on interest rates, which is good for borrowers. But once again, eventually we're going to see those come off the floor. But at this time, I don't see it in the real near future. So hopefully you found some value in this, guys. Feel free to give me a call or send me an email and give me some feedback. If you'd like me to talk about anything else, and hope you guys have a great week, and I'll talk to you again.